Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look at a trade idea that I've been monitoring. It's actually one that I've been talking about for the last couple of weeks. You guys, if you've been watching my videos, you will remember that I've been talking about how with euro dollar, which I've got here on one-day candlesticks, it was sort of consolidating in the last couple of weeks, but then it did rise to test that key area of resistance in the 103.50 area. And do you remember that area of resistance also sort of coincided with this long-term downtrend that we were in and the 50-day moving average? You can see it's kind of snuck behind these trend lines. That was around this area. Now, I was saying that this might be a nice area where people might want to start adding to short positions, and that does so far seem to have been the case. In terms of the fundamentals, why are we seeing these moves in the market? Well, remember last week we had quite a lot of inflation data out of the US, all of which was pretty much pointing towards the idea that price pressures there have now peaked. Now that resulted in some short-term dollar weakness as people sort of pared back on their Fed tightening bets, and it sort of alleviated a bit of uncertainty that had been suppressing risk assets. So we saw equities rallying, and that obviously hurts the safe haven US dollar. But this week we've had a refocus on global growth concerns. Okay, I mean the main thing really was that data out of China, although we've actually had a bit of data out of the US that was kind of weak. But pretty much the dollar is strengthening at the moment as a result of haven buying on global growth concerns. There's also a lot of concerns in Europe still. I think there was a report earlier in the week talking about how one of Germany's major energy regulators thinks the country is going to have to reduce its gas usage by 1/5 this winter if they're going to avoid rationing. I mean, that sounds like they're already talking about rationing to me. But anyway, it's not good news for the Eurozone economy. Like I've been saying, the news this week out of China has been bad. So what are people doing? They're buying the dollar, and we're seeing euro dollar move lower again, and we're already back in the 101s, which is, in 3 days. That's a more than 2% drop. It's pretty hefty compared to the, last couple of weeks where we barely budged. But yeah, for me, I'd be looking to ride this lower. Okay. I think that the dollar can continue to strengthen as a result of fundamentals as global growth concerns continue to get worse. I think, okay, maybe maybe US inflation has peaked and the Fed isn't going to have to take interest rates to like 5% or 6% next year. But they're still very likely to take interest rates to about 4%, which is way higher than where interest rates are going in the UK and in the Eurozone and other parts of the world. So all of these things potentially still working in the dollar's favor. And then this long-term technical downtrend looks very much like it's still in play. Also, if you're looking at more sort of short-term technicals, you could argue that we've sort of formed a bearish flag in the last couple of weeks, and now we've broken below that, and you can see just snuck in there, that's the 21-day moving average. The technical bias is bearish pretty much. So the areas you want to be targeting now is in the immediate future, we've got support around 101. Then we're targeting a move back below parity to the annual lows here around 0.9950. But that's what I'm looking at the moment, guys. I hope you enjoyed the video, and I will see you all in the next one.